All right, Alpha Fam, Coach Jam here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the Alpha Syndicate channel, if you could please give us a like, comment, and a subscribe. We really do appreciate the support. So let's get into the market, guys. So we're kind of chopping sideways. I want to see us start moving with some momentum. We're still obviously waiting for the U.S. market to open, so it's a little early. We seem to start making a little bit of momentum right now, but we need to start getting back up into this zone, and I'm going to explain why. So right now, and again, this kind of goes back to this spring. So when this accumulation zone occurred, the first thing I immediately looked at this and said, okay, hold on. We're creating a Wyckoff accumulation that's going to lead to a spring. Once we do this spring, we're going to have a retest, but we need to immediately get back up into the zone so that way we're not down here for a while. And the reason why this is important, guys, is we don't want to hang out down here. We want to get back into this zone, retest it as support again, and then continuation to the upside. What ends up happening is if we stay down here too long, guys, is we don't actually break up into this zone. This wasn't an accumulation zone. This was just one massive bear flag, which it definitely was. I mean, I guess there's no denying that it was a bear flag. This was the breakout range, and now what we're going to do is we're going to sit in this zone for like the next 2 or 3 months. Regardless of which scenario happens, guys, I still think it leads to the same thing. I still think that Bitcoin this year, with all of the macro events coming up, still makes a new all-time high and catches up with the things like gold and silver and all these other things that have been running and that are at all-time highs or breaking into new all-time highs. But I want to see it happen. Again, it's a timing thing, guys. All right? So whether this happens earlier or later, you have to understand what's actually going on. But with that being said, we definitely want to get out of this zone. We do. If you look at the last time we did one of these springs way over here on August 5th, guys, all right, you can see what happened. When we broke out of this zone, we bounced so hard that we pushed back in it, and then we got back into the zone immediately, all right? We didn't just sit here and chop around, you know what I mean? When we broke down out of this zone, we didn't just sit here and chop around. No, we broke back up and got back in there immediately. And that's the point of this spring, all right? We need to get back into this zone because if we don't, again, what I think would happen is there is a chance of us staying in here for a while, and then when we get closer, and obviously May is when Jerome Powell gets replaced. I think going prior to May, probably like in March, I think the market starts to price in the fact that he's going to be replaced and that there's going to be a new Fed coming in with the full intentions on lowering rates and doing quantitative easing. And I think that people have to also understand too, because there's also a couple of things I haven't even really seen any other KOLs talk about, which is one is this. Quantitative easing, guys, is here. Like, they are printing money, and we're seeing them print money, guys. Like, we're seeing them do it. Another $18.34 billion. They're printing money, all right? So what happens when the money gets printed, all right? What happens when the easing comes? We know every time they've done easing, guys, it's always resulted in a bull run. And then this is when things like this expand over the 50 when you get these type of scenarios. All right, guys? And this is why we're seeing things like the ISM expand and all of these other things. And it's all, I think people have to take a deep breath and look at this intelligently and like get off of this whole 4-year cycle thing, because I hear it every day. And quit looking at things like that, because I think it's very, very dangerous to do, because I think it's going to limit yourself from being able to participate in the market the correct way. I think people have to look at a set of different factors and the reasons that actually make these markets move and the conditions where risk on assets actually catch a bid. And we're just now getting into those conditions. And because we've never had those conditions before, I think that's why every time we've made a run or every time crypto started to pump, it never really sustained. It always just kind of died off because it's all built, it was all hype. It wasn't actually on fundamentals or on any of these conditions actually lining up. It was all hype. You had the Trump pump hype, you had the hype pump from the ETFs and all of these different things, and we're now finally just getting the conditions required that we've always had in every previous cycle. Just now. They're just now about to happen. And the reason why is, and this is why I always recommend people to go watch Raul Paul, he explains it. When COVID happened, guys, when that entire, fiasco occurred, that delayed the debt refinance cycle and extended it an extra year because of the insane amount of money they had to print during that period of time. And that led to the largest largest interest rate hike in human history. And that took a very long time for them to stop that tightening process. That tightening cycle lasted twice as long as the first tightening cycle. You can literally, if you want to, guys, and this is just totally up to you, you can measure it. You can look at this and you can say, okay, how many days did it take from this peak to here? How many days was this? Over 1,300 days. Go to the last time they did tightening. How long did it last? So we'd say from here to where it stopped, over twice as long, guys. So why do you think it wouldn't have extended and taken them longer to start easing again if it took twice as long to stop the tightening? You guys have to understand and just look at this stuff intelligently. And I think a lot of people don't do that. They just kind of let the day-to-day price action, a lot of these news stories and different narratives that are posted, I see constantly being, thrown around crypto Twitter. And it's, I think, honestly being done to make people want to leave the market because they don't want people to participate in this, guys. And it's not that they don't want people to participate, but you have to understand, smart money is smart money for a reason. They control the narratives. They control the entire dynamic, all right? The same people that own all the media companies are the same people that own all the ETFs, are the same people. They control everything, guys. They're the same ones that own the social media companies, and they can push these narratives. That's why we always say price makes narrative, because they will manipulate price, and then they will throw out a narrative so everybody runs and tries to attach themselves to it. It's just how it works. So with that being said, guys, let's look at a couple of other things. Again, today we're just kind of chopping sideways. I'm waiting for the U.S. market to open. There is something interesting that's going to happen in the next couple of days while I'm going to be watching closely, which is these unemployment data, guys. That comes out tomorrow. And the reason why that's going to be important is because we just had the unemployment, basically like when people get unemployed, you can file for unemployment. So the unemployment applications, I think in January was the highest they'd ever seen in like the last 20 years. So and they're not currently looking to, or they're not forecasting a raise in this, which I think is interesting because I'm actually looking that there would have to be a raise. You had the worst unemployment application, like the highest number of unemployment applications ever in January in the last 20 years. It would make a lot of sense that the unemployment rate actually raises. And the reason why that's going to be important is because then people are going to start saying, hold on, rate cuts are going to have to be back on the table, because that's the reason why they've been cutting rates, because the unemployment and the labor market has weakened so much. They had to cut rates because that's what they do, guys. That's like the secret sauce in all of this for rate cuts. Lowering of inflation as close to the 2% goal as possible while unemployment rises. So with a weakening labor market and a lowering of inflation, that's the recipe for cutting rates. And that's what we hope we continue to see. The market's also become extremely fascinated, I would say, with rate cuts. Like they really, really, really love rate cuts. It's kind of crazy, but that's just how the market's anticipating and pricing things in right now, guys. But with that being said, I'm going to be watching that very closely. NASDAQ and everything is just kind of chopping right now. Honestly, guys, with their bounce they had the other day, NASDAQ's right underneath of the 50-day on the daily. You can see it's just reclaimed it on the 4-hour. It's just now gotten in the green for the day. We have same thing with S&P 500 futures. It's well above the 50-day. And these things are just kind of chopping in this zone right here, guys. And honestly, I'm expecting these things to break into price discovery. I would expect this to break out at some point here soon. You can see it's just been kind of consolidating in this general area right here, guys. And I think that when it breaks out, because it's never like, obviously these things are making new all-time highs and it's kind of just up and to the right, but these things haven't had like these parabolic big breakouts. Like they're just kind of slowly, consistently grinding up and to the right, all right? So with that, we also want to look at one other thing, which is Bitcoin dominance. Bitcoin dominance has been doing something kind of crazy the last few days, but it's well under the 50-day again, guys. It's a little bit in the green today. You can see over here on the weekly, we've come down. I really want to get out of this zone. You can see we've been in this general zone for weeks now, guys. Weeks and weeks and weeks. Like literally, we've been in this zone since September. Yeah, since the beginning of October, guys. I would really like to see us get out of that zone. And honestly, alts to outperform. I think it's just kind of their turn. Alts have been really beat up, and obviously because they're the riskiest of risk on assets. So anytime things get bad, alts always sell off first. So alts are already at their lows, and honestly, I think it's just time for them to really catch a bid. The stars are aligning, guys, for risk on environment, and I think people have allowed day-to-day price action in the last 3 months of FUD to kind of knock them off of what's actually occurring. I see it all the time, all right? It is, I understand, especially if you're holding into positions that are like, either in the red or you're really down on, or every time you try to make a trade, it doesn't go right. I know this market's been extremely frustrating, guys, but they're always extremely frustrating before they get extremely good. Always remember that. And again, if this is the first time you've ever found one of my videos, or the first time you're found a Alpha Syndicate channel, my name's Coach Jam. I've been a digital asset investor going on 5 years. I am the founder of Alpha Syndicate. I also host all of the Crypto Talk workshops inside of Capital Club. And if you want to understand and learn this stuff with us, guys, how we connect the macro, the fundamentals, the technical analysis, and how we combine all of this together to give us a real edge over the market, click the link below, guys. We'll see you inside.